All right, now I'm going to go live. All right, great. Thanks, everybody. Had a bunch of issues with this. Yeah, now we're live. We're set up. Thank you. Had issues with this all morning, so let's get right to it. Thank you. And you guys absolutely give me some chat response here. Thank you, Chris. What's happening? All right. I don't know. Ever since I did this Windows update, it's been a disaster. Absolutely destroyed my setup for the YouTube studio. Well, happy holidays, everybody. Big new year. Happy new year to come. And let's get into our holiday event. You know I'm good like that. So, we're going to give away some free software. Let me know where you guys are from. And any questions, we'll get to them. I want to talk about a few things today. I want to talk about the course, but I really want to kind of use this opportunity to get it, really start our conversation in harmonic patterns away from the patterns themselves. Everything that we want to do going forward and everything I'm going to be focusing on in the course. And so this is a good place to start. Here's the course. Everyone that is a gold member subscriber or you upgrade, we've got a course 8, 9, and 10. And this will go through all of the advanced strategies. We'll go through a harmonic pattern collection software strategies that focus on identification, but not patterns. We're moving from bat, Gartley, crab, butterfly. We're gonna talk PRZ, terminal bar plus 5. We're gonna talk impulsive confirmation, complex confirmation. And we'll do it in these 3 sessions, and then we'll also have the gold member sessions. So again, we're going to have a whole bunch of material and presentations the first 2 weeks of January. And it calls for it. I don't do these courses too frequently. It's been a few years since I've even done a course. So get with that. That's available on the blog. So today, what I want to talk about and what's critical as kind of a message for anybody that has any interest in harmonic patterns is what is it going to take for us to be able to turn this into a opportunity. And that's all within what I call the harmonic pattern framework. You're looking at it right here. And let me just flash up some disclaimers so that we're all good before I get into anything. There you go. And so today, what I want to talk about is really the type 1, the type 2 strategies. A lot of you are familiar with that. I've been bringing those strategies, specific strategies out over the last few years and have really done it in the software. So here's a harmonic pattern. And again, this can be any harmonic pattern. There are some differences that I will get into, maybe pattern to pattern. You guys know I love those deep crab patterns, but the framework is the same. The reaction reversal framework is the same in every instance because then this gives us our proper expectation. So let's go really quick. I want to show what we did this morning, and I'll post this morning's presentation in the gold member session for what we were talking about, and really kind of highlight what we're doing here. Because when we came into this morning, we were looking at this ABCD pattern. And what I was lining up is saying, look, we're in a strong bullish uptrend, and we know that this is a type 1. That's the first time this has completed. So that's a type 1. That's how we look at that. And let me just clean it up. Let's just show the last one. I'm working on harmonic pattern collection for e-signal. I'm going to show the trading view, and if I have time, I'll get out the MetaTrader as well. But this is all the same, and on all the platforms, we're looking for pattern recognition to let the program recognize the pattern and then go from there. What I'm working on currently is kind of it'll be an update, and it'll be kind of an advanced recognition, but what I really want to focus on here for everyone is how to convert the patterns to opportunities and how to read it. How do we know? How do you know that this is going to reverse versus, to a small amount versus a large amount? Again, I'm going to post this morning session up for everyone, but this was our measured move. We were looking for the target to move down to 12,788. And this is, again, the framework. This is our basic expectation. This is how I laid it out this morning. This is how we were looking for this. And this is probably something that will be automated so that people don't have to even think about it. But to recognize that we have a reaction move after, as soon as the sun icon, that sun icon right there, and I can even increase it, is generated, there are some automatic thoughts, I think is the best way, ideas, expectations to be considering every time. And I'm going to increase the size of that terminal bar. And let's take a look at that. The terminal bar, that if you're not aware of that, or if you're not aware of any of the terminology that I'm going to get into today of type 1, type 2, terminal bar, let me know and give me a shout out. Again, everything that we're doing is available here at harmonictrader.com. And before I get into even that breakdown, the best place to start, everyone, is go to the basic membership, register now. That's your free sign up. That gets you all of the materials and resources. Again, go to the basic members page here. Once you sign up, you can get all of my books and get the software. And that is my challenge to anyone here that is listening or watching this presentation in a recording, that if you are into the harmonic pattern analysis, it clicks with you, but maybe you learned it from someone else. I need you to start over and begin again and start with these resources, because chances are there's a lot in the framework that I'm talking about that you don't understand, because most people have just been tracing out ABCD structures and hey, this is a phenomenal move. That huge reaction off of that pattern was a great opportunity, but over the population of almost infinite possibilities that you could draw, we need to break it down and remove, one, those factors that invalidate the opportunity, and two, those that distinguish whether we have a reaction or a reversal. And that's a huge part of why I'm personally moving away from the pattern, because I feel that the pattern has been, as generated by the software, gives us the opportunity. Now our job is to navigate our mouse, clicking the mouse from terminal bar and zone to target one objective. And here we have actually a retest. This is what we anticipated for today, for a move back up to here. Do we get the target to retest now? And what's going to make the difference between my executing this opportunity the second time there, or do we hit it here, or how do we know? Because there's a lot of in-between stuff that needs to be, I think, spelled out into detail, step by step, so that it's clearer. But the concept of a framework is critical for everything that we do because one, there's a measurement behind it, and two, it sets the expectation. So if we know that this is a first time a pattern completes, our expectation is a reaction. So I've been spelling that out since really the Harmonic Trading Volume 1 book, where I laid out this very framework. Again, look at the framework. It's the same for every pattern: bearish, bullish. This is a bearish structure, bearish bat. But again, we look for not only the move down to target 1, but there is a nature, a type 1, type 2. Not only is that the first or second time, but type 1 reaction says a whole lot about what we're supposed to expect from D point to profit target 1 or 2. The reaction is really needs to be aggressive, and once it gets going, okay, there are specific things that we look for at its completion. And those are some other things in the course I will spell out in detail. Today I just want to review the whole concept of framework, harmonic pattern framework. If you are not with the software, so somebody that's not with the software, why don't someone respond, tell me you're not with the software. And I'm going to give you a software. First person to respond says I want the software. So give me a chat. Someone hit me up. I'm going to give away a couple books too. You can download all the books, okay? But I will mail some books to people, and we'll do a giveaway towards the end. But getting with the software and then understanding this framework, okay, is going to round out the entire predictive model, and that's really what we're talking about. Okay, Queen Bee, you win. You're not with it. So Queen Bee, I'll get you. Send me a note. Harmonic Trader at Harmonic Trader. Okay. I said the first one. Okay, we got our first one. But here's the thing, folks. Let's start over. Okay. I'll do it again towards the end, guys. I'll give away a bunch of software and books towards the end. But let's just outline this one concept, because this is going to take us to the whole next level of where we are going, starting literally a week from today with our Monday session, first session of the year. Is that we're going to now talk from D to T1. Because if it's a D point of a bat or an ABCD or a crab, there are some differences that we can distinguish, but really what I want people to think is to remove away any hidden expectation or hidden bias and understand that there is kind of a formula that needs to happen from D to T1 or T2. Because once we get to D and we have our sun icon, then we're looking for immediate factors within 3 or 5 bars. The other thing that I've talked about, but I will really define when we meet in the course, is the whole stopwatch effect of once D completes, we get our sun icon, we're at the D point. We're looking for that whole reaction within 30 bars. So that then sets our expectation on any time frame of a limit of, all right, if that's D, okay, and we're 9 a.m. and it's a 5-minute time frame, okay, we're talking 30 bars within a 60-minute interval. And with that, the 30 bar effect is then you don't even have to worry about anything beyond that within the first 30 bars. And a lot of times this reaction is going to happen before 30 bars. That's your basic type 1 strategy. And that is a very general assessment of the framework from D point to the right. Once you form the sun icon and we get what we're looking for within that pattern, okay, then the whole event from D to T2, which is our maximum, can be measured, can be anticipated. The other thing about this is that it's a reaction, so that we have a limited time. You see that sun icon, and we know it's the first time it's completed. This whole reversal behavior must happen within 5 bars. Even better, we should see an individual reversal in the candle. We should see, and really the trade beyond the terminal bar does not begin until we see at least one red bar. Now, some of these strategies are going to cause you to miss opportunities, and that's okay. And those are a few other, I think, uh, ancillary considerations that we are going to miss opportunities. We're going to miss great trades. That's great. That's not my objective here. My objective is to outline, highlight, feature those patterns that have the clearest, most consistent reversal conditions before it happens. And I think I've gotten that down to about 3 or 4 different states. So it's really important to be aware of the fact that when we're looking at the first time versus the second time, we're talking about 2 different creatures. And we have different sets of expectations. But all of this is within the harmonic pattern framework. We are back now. As we speak, we're looking at the secondary retest here, and we have yet to get that as a rollover. All right, here is the secondary retest, and we outlined this morning in our gold member session. And from this point on any pattern, my expectation, just expectation, I'm not saying it's going to happen, but my expectation is I'm looking for a T2 pullback. But I need to see some things here. I need to see confirmation of HSI, the pink arrow. I need to see some other things, maybe a trend line violation. Okay, and there are definitive conditions that have to unfold. And when we bring in, say, RSI or amplified, here we are. And this is, again, the pattern we featured this morning. We were looking for this down to 788. The thing collapsed to 40. But then we were looking for the reversal back up. We got a pattern down here, but this at the first spot was an immediate move. Now what we're dealing with is something that's taking more time and has not confirmed in the place where we need it. Again, type 1 reaction, type 2 reversal. This is the framework, folks. This is why it's critical to understand where we're headed in terms of understanding what's direction and what is, location. I think that's something of kind of a general term of, is it up or down? This morning we definitely the plan was look for the continued uptrend, but down first. And so within that direction, what's the exact area? We got to locate our trades, folks. And how we do that the first time is different than how we do it the second time. In fact, we did have confirmation. Again, I don't want to get too much into the confirmation strategies that we'll cover in the course. I want everyone to understand, though, harmonic patterns usually have 2 opportunities. The first time it completes needs to be treated differently than the second time. And the most important note of all is everything that I will do going forward will be off of auto-generated patterns like this. And I'm not even looking at hand measured structures, because everything I want to do, it has to be defined within that automated framework. A couple questions. Okay. Hey, VJ. All right, VJ, I'm going to throw it out to you. Send me an email and we'll get you set up, because the other software that I want to bring out and I'll show everyone is the TradingView program. But how much, hey Scotty, how's it going? That's a great question. Um, how much higher do you look for the reversal before it becomes invalid? And so again, everything that we want to think about, and we're looking at this secondary retest. This was the retest. This is how we laid it out this morning. So where's the opportunity here? Okay, and how much time do we give? And again, that comes down to the fact that everything we're doing the first time is harmonic pattern reaction. And so within that window at the D point, I think if you recall from this morning, as we came into our session, we started with looking at that as that was rolling over. That happened within that quick window. Okay, and so the whole decision of how much do you give it has to deal with not only price level, but how much time. How many bars are we here? Okay, because if I'm entering a trade and I don't know anything and I just want to put my trade in at at the zone, which is there, that's the sun icon, that's where it officially completes. Well, I still am going to have to go through a fair amount of drawdown, 10 points before I got that move, that rollover. And again, we're looking for target one. The aspect of it, the really critical aspect of this, again, with any pattern, comes down to the fact that we wait for the pattern to complete. But where is the first bearish candle? Where is the first candle that cannot continue? These are questions that I would ask myself, because that's really the point where we make the decision. If our entry and our pattern is really defined there by the sun icon +1, which I think I talk a lot about, of waiting for the pattern to complete, and our action starts on the bar after the sun icon. That makes it pretty easy if we're just following along, because hey, if I wait for a sun icon, that's a 5 minute, then I know the +1 bar up to that zone is somewhere within that 10 bar limit. I should be seeing this reversal. So if you're here at 8:30, 8:45, okay, and it completes, you're not entering that position until maybe 8:50 or 8:55, because there's your first bearish candle. Not to mention, okay, and again, you dial it back of how much do we give it? Well, if we're looking for that early sign, and there's a group, there's usually about 3 or 4 specific strategies that I will, like a checklist, I'll go through once we get to sun icon, that'll help me make that differentiation. Where's the first bearish candle, or what's the first candle that does not continue in the predominant trend? Well, that's right there. And that tells me, okay, that's a starting point. That's a glitch in the serial move of this last price leg straight up. In that instance, okay, then we look into that box. Then we're in that zone. Again, um, look at this morning's session, but that laid it out kind of ideal for where wasn't really interested in anything until we got down to minimum target 1, target 2 area. And again, that's where, if we're here, okay, and that's our first bar, all right, and we get into the trade. Let's say you got into the trade early, right at the ABCD, something like that. How much do you have to give it? Well, it's, again, clearly right above the zone is a general area. If my top end of my zone is 828, how much beyond that on the first test am I going to allow this? Probably, you know, maybe what's the width of this zone? What's the width of this general area? And I will be showing how I've showed this one in the past, but A lot of times I'll look at what's the distance between the top end of the zone and the hop or the main primary leg. This is probably better with a complex structure. And then just take that distance and add it on top. But if I'm looking at this area, okay, if I'm trying to optimize the PRZ and I see that my action bar here is +2, terminal bar, that's the sun icon, that's your terminal bar, 1, 2, then my execution is more towards the hop level. And as many of you know, I will be talking about hop, harmonic optimal price, and why we favor that. But the aspect of how much this is, maybe 10 points on the initial execution, it does not stay 10 points and should not as we progress. And this actually should decrease as you move along. We should see this thing. You get a stalling behavior here in a couple of bars. That's an ideal window right there, 3 to 5. But as that rolls over and rolls out, okay, we're not maintaining the stop. If anything, once we clear this window, okay, we're running a trailing stop similar to what the original entry was, but we have to be moving that down. And again, part of what I'll do is also how do we react down here once we get to these targets? Because if that's our goal, which it is on the first objective, to go to target 1 or target 2, mission accomplished. And the rest is gravy. If not, you shouldn't even be worried about. One of the things that we'll look at will be trend lines. Okay, because it really is about the management, and and probably the trickiest management is the first time you're entering the button, because you're hitting the button, because we need to know how much room do we give it. There's the pattern completes. How much time and how much space beyond that measure move does that require? It comes down to what's it doing into the zone, and do we have confirmation? Like, here's the other part of it that I want to look at. Again, you have triple confirmation, 1, 2, almost 3, didn't register, felt just shy. That's a tough one. I like to wait for the confirmation in the zone. What was that? That was HSI was what, 88, 87? 80, 86 it looks like. So that was just shy. And how do we know if we don't have HSI confirmation to hit that or not? Again, these are all decisions that have to be based upon the other metrics we look at: amplified, regular RSI. Do we have a RSI BAM completion? What is going on there? Because again, we have expectations of reaction. Queen B, the email is harmonictrader@harmonictrader.com. It's in your chat box. You can contact me on any of the social media channels as well. So we will look at that in detail. Now, we're looking at the pattern we were dealing with this morning, just a couple hours ago. We got the move down, and remember I was saying, I really finished up the morning and by saying we want to see like a crab structure or some kind of 1618 off of that level. And let me just show, this is what we got. So let's bring this back. Too many patterns here. Let me bring out the bearish. What was it on the, I think it was the tick chart. But we ended up getting a crab down here. There you go. That was what I talked about when I left today, and I said look for these 1618 kind of offshoot moves. And I literally drew it like this, like look for something like that. And that's what we got. And so this morning We had a couple of patterns here around 59. Um, and now let me remove the patterns because it's going to clear it out. But that's literally how I was drawing it. And again, if we're talking framework, if we're talking how to read this in terms of looking at the pattern as a zone and then looking for other things of confirmation that help to kind of support that argument, this morning was another one where we got that 1618. Took a little bit of time, but check out what happened here on the 5 minute at the same area and around right around 12 6 sorry, right around what was it, 12 760. Three, this was perfect triple confirmation down here. All right, 1, 2, and 3. And again, I'm going to get into detail of how we tie this together with harmonic patterns the first time, the second time. But that was the general sequence of patterns that I was looking for it to kind of the way I was looking for that to unfold. We had the crab pattern. Let me bring that back. Where'd that go? Yeah, there you go. Here's the crab pattern from this morning on the 233 tick. Again, down there at 60. Too many structures here. Clean it up. There you go. And I would look at this, looking at the patterns in a general way of when you have multiple structures overlapping like this, you want to look where they all converge. That hop level, 59 definitely, that was our main number. That was our first number that we had this morning. Again, this was comparing the 5 minute, there you go, that big 5 minute bearish ABCD. There you go. That then set us up. And now we're back up there. And here's our type 2. Now we have another HSI up above the hop on the type 2, but this one's a little bit different because the trend line coming off of that low is now starting to get violated. Looks like this. And that's not too much different than the first test. Okay, but we're still looking for a check back. Still early in this move, but that sets us up here. That's where our secondary test, our second shot of a secondary test comes in, and line that up off the 5 minute. What's that? It's around 36. So this is what we started with this morning, and we've been looking for this retest. This first opportunity with HSI is not a bad place to be looking at that, but there was no follow through. Once we actually finally started to roll over, we came back against that downtrend move, and that's a stop out. That's a stop out. I think looking at this secondary shot, we're going to take another shot at here. Let's look at this at 12,836. But that's how we break it down. It helps the fact that this is now breaking the uptrend line from this morning at 10 a.m. And there's some things that I will look at. Come back to this in a couple minutes. But that's how we line that up. And we're going for target 2. Go back to 88 on that one. That's the expectation. Would I take a trade based only on the indicators? Maybe. But I prefer the zones. I prefer the hop levels. There's no reason why we need to fight these levels. And again, I don't think there's any reason why we need to hand draw these opportunities anymore. And we do that with harmonic pattern collection because everything that I've worked on of what I've really translated as harmonic within M and W formations, uh, I feel we've quantified in the software. Now, here is a shark pattern on the 4-hour chart, okay, that has done an explosive type 1 move and just keep on going. Now, this is one of a few. Let me go to let's look at the 60-minute because we're now probably better to look at a crab pattern. Bring that up. And we're back up there retesting. We talked about this morning. We're retesting this. There's a couple of crabs up here. S&P is even better. But starting to overrun this zone. I will target this today probably as high as 12,860, 859. That's about 35 from current levels. This is in a type 1 on the 60-minute. Did we get, oh yeah, we got down there on that one. Sorry, this is a type 2. Let me clean up that chart. Let's look at the last one. There you go. So that came down to our target 1 on the hourly chart. And looking for a larger retest on the secondary shot. There you go. That, because it's a deep crab, more important, what's the first bearish candle? We're back here on a retest. Look how fast this thing happened. Straight down within 2 candles, and that's on the hourly. And now back up on the retest. There's our level 1. And I would just run your trend line underneath there until the hop, because we need to see either HSI amplified, some indicator confirmation up there, and hit the hop level or very close. And look at where your indicators, what they're doing. Now, in the course I'm going to lay out on the 8th, 9th, and 10th, I'm going to give you guys a checklist. There's going to be about 4 or 5 questions you ask yourself. Probably, I think 3 main ones. Is there indicator confirmation? Do we have HSI? What type of indicator confirmation is up here? In this case, what we're looking at right now, there is no indicator confirmation. We know this is a secondary retest, so it's going to take longer. And we're looking at this, the way to look at that is probably as high as the hop level, and that's on the hourly chart. I was also comparing this on a 5-minute chart. Here you go. And all right, there's the check back on the 5-minute. So what do we do in that situation? We've got a 5-minute that says type 2 ideal. We're checking back right now. 36 is the number. The hourly says we're in a bearish zone, but there's no confirmation. Okay, on the longer term time frame, I would still look at that as probably any move off of this, any short term move as a reaction within that larger trend move. This right there, that's where we started. This was what we were waiting for. And if you came in here late, or you're going to watch the recording, go watch the first few minutes of our session today. This is exactly what we were targeting. This is the type 2 move now, just above the prior zone. And we have HSI, and you have your check back happening right now. So the only thing I want to look at is, tell me what's going on in that check back. Tell me what's going on with our indicators. This is a 5-minute time frame. And then that relative to, we know what the deal is on the hourly. And we know, then look at, say, what's a 233 tick? That's a pretty good time frame to compare a 5 minute. And we've got a butterfly up here. In my volume 3, folks, in the volume 3 book, I talk about time frames. I talk about a primary time frame, a distal time frame, and approximate time frame. The distal longer, proximate shorter. In this case, let's call the 5 minute our primary time frame, a day trade. The hourly, we're kind of checking that, and that's still showing us maybe that needs a little bit more time. Now we break it to a 233 tick. Here's a butterfly, really nice. There's our first reaction, but we didn't get down to target 1. And that's what we're looking for. So this is still considered in a type 1 trade. How do we handle that? Do we take another shot on this? There's some things to look at. This might be a great day trade. You're at 36 right now, and aside from all the other time frames, maybe we get down to 22, but we still need to see a few items here to validate that. Let's look. Is HSI back up here? HSI is our harmonic strength index. That's our last indicator. We always want to see that in the direction of the pattern. And the last one is a bullish reading against a bearish pattern. We want to wait. We need to see some kind of trigger. We utilize these indicators as a trigger. Looks like we might get one more test up here. And again, remember what I said about direction and location. Okay, we're anticipating a direction, little reactive move lower to 22. Our zone is 35 is on the top end, but looks like we might need a little bit more time. Maybe we go to 38, 37, or we spend maybe, there are a couple more minutes going sideways at the hop before we make the breakdown. Again, these are things that if they're not lining up in an ideal way, we treat it as a reaction. And then everything that we do from that point forward has to unfold pretty aggressively. You're getting a little bit of a check back, and if this is going to be a secondary shot, I'm just thinking reaction at that point. But I didn't have, for me on that 233 tick, didn't have anything to correspond with that retest. So I might be sitting on that, not taking that trade. Looks like it might get a little dump out to target 1. But my preference is to get indicator readings linking up with the hop, linking up with the zones. That's definitely what we want to be looking for. Here you go. Again, this is a common, look at what's going on here, guys. A nice swift move, but down for 10 and straight back for 10. That is a common behavioral trait of harmonic pauses. And you got to think of these within behaviors. I think that's another concept. And again, a few new ideas I certainly will be introducing of ways to think about this as we go from point to point. Many of you know that I like to look at, say, the CD leg breakout. Like once we get 4 of the 5 points and we break out of the B point, and especially when the software triggers the pattern, there's an expectation to go into the zone pretty aggressively. That is one example of several types of behaviors that price action will take on depending on where you are. If it's a, say for example, if it's a true type 1 move, great butterfly pattern, that's an ideal execution spot for a type 1 move. That should go to target 1 9 times out of 10. as long as we don't have anything to oppose the pattern and you have that HSI going against you. I mentioned when we started today that in the course we'll talk about those signals that warn of flawed patterns or flawed reversals or flawed reactions well before it takes shape. All of that is designed to enhance trade management decisions because we can stare patterns in the face and execute them flawlessly all day long if we're not going to manage and execute at the levels, if we're not going to recognize reaction situations versus reversal situations, we are going to be sitting on our hands and missing moves left and right. That and what we just walked through here, this 10 points down, 10 points back up, we sat through it. And that's a very typical move I would sit through during the day because I have nothing behind it. I don't have an HSI trigger. We're getting closer. And again, that helps to establish my proper expectation, but it's up here. Okay, that confirmation on this pattern is going to be up here. So again, we're early, no need to be involved with that unless I had something substantial to associate with it. Can we treat HSI arrow as support resistance level even without a pattern? Yes. I like to go off of the last 5-minute HSI reading. Yes, those can get violated, and I'll show you one here. But typically, that keeps me out of trouble. All right, if I'm looking at that, well, this morning was a great situation where a big move down, we had the HSI. Okay, I was anticipating down, maybe not that much down, but not a huge down, but we were looking for 88, 80, what was that, 80, yeah, it was 88 minimum. It goes to 40. But that's where then HSI comes in and says, all right, now it's ready to at least give us some kind of reactive move back. Today, and I think because it's the week we're in, yeah, these are going to move a bit easier. This looks like it wants to go higher. I'm just trying to, it's funny when I say these things and I say, oh, it looks like this, looks like that. There's a reason behind it. And it's because there's some things that I'm seeing specifically, again, that I'll be highlighting more and more as we go forward, where it's not only the fact that it's higher, but it's longer. The fact that this thing has gone up but stretched out and continues to stretch out. Yeah, there's the check back. That's perfect for where we'd want to see that. Okay, but we're 15 minutes now into this check back. This thing should have hit and come off if that was really strong. Or we should have, generated an RSI BAM or another trigger. We don't have those clear signals there yet. And I think that's something where they see the patterns well, they can operate off the software, but the little trigger or the little confirmation that we need to see, where our execution would be something like that versus maybe down here, makes all the difference in the world. Or even better, I'll do you one better here. I would rather see my executions and my HSIs break the trend line. So instead of even here, I would rather see it to the right and let this go sideways and roll down. But because this thing still has the support of the uptrend line, there's going to be some work to break that. And so maybe I'd want to see that stalling behavior to the right of the trend line after the fact, and it's still not responding in that way yet. There's the arrow. Okay, we do have some levels here. Here's our check back where we retest that area, but it's still early. And so I would look at that and to come back around on, do we look at these as static support resistance? Is that resistance? Yeah. That arrow that links up with HSI, that is resistance. But it's, I think, more of like a trigger because it's dependent on a pattern, a level, other indicators to really give it the strength it needs. Even with this check back where we are, we just entered in, we're about to enter into our next 5 minute interval. Green arrow, green candle, green candle, green candle. All right, that's not something you want to see if this is going to be a strong type 2 reversal. We should see this thing going sideways. If it was weak, if it was really weak, we would see a bearish candle form. There you go. Maybe another 45 seconds. What if the indicators show opposite direction? Does that indicate a consolidation in progress? Thank you, Clara. That's a great question. And yes, that's exactly what I'm referring to. And that's what we were seeing in that butterfly, okay, on that 233 tick. So the question is, and because HSI is critical to the whole framework, it really is. The HSI has, I released that about 5 years ago as an enhancement on RSI, and it has become just a integral part of how we look at the zones because the levels give us the numbers. If we're favoring things like the hop level, which is our top end structural level, and then there is our first confirmation. As I said before when we looked at this, our assumption is to go to target 1. But what happens when we're going there that we run into a bullish HSI rating like that? And that matches up with down here. All right, that's a warning sign. So yes, that means more consolidation. If you're in that trade and if you're triggering up here at the hop with confirmation at 12, 8, 36, 37, you get a swift move down here, and then you're confronted with that HSI right in your face, a bullish reading in a bearish zone. Yes, it's a warning sign. Best thing is to scratch it out, take the small profit, look to re-enter, because you're usually going to see that type of consolidation come back. And I'll go into this in the course. I'll talk about it because there are some other things that we'll look at that help to define whether or not to scratch the trade. On this other test here, and as we started looking at this, even on the 233 tick, there isn't anything there to support the re-entry. So within the framework of the pattern, we plug in the triggers. Do you have a trigger there? Do you have HSI trigger? Are you in a bearish zone? You have a bullish reading? That's a warning sign. These are all to facilitate the decisions of, do we stay in the trade? Do we scratch it? Are we going to get to target 1? Do we get to target 2? Critical, really critical, because my opinion, if you're positioning yourself properly, you're going to have plenty of time to make these decisions so that your positioning is superior. The patterns, the confirmations, that's what gives us the ability to capture reactions and then give us time to make the decisions of whether or not the whole thing's going to work out. We'll get into that a little bit more. Some platforms show patterns, some not. Would you recommend eSignal as the preferred platform? It's I'm going to get into that a little bit more next week. And we've upgraded some of the HSI readings on some of the other platforms to default. Make sure that they register 100 or 1,000 bars because it's dependent on the time interval. The other issue that some people have is that the fact that, say, stocks and ETFs function off of a normal day 9:30 to 4 session, and futures and others are going to give you 24-hour readings. So that's something else in terms of time frame that may generate different values. And our answer is to probably come up with a standardized web version. But again, you're still even going to have slight variances on data feeds. And one of the best ones to look at, say, an example of that is crypto. And so let me just go over to the cryptos really quick and use that as a segue, because look, there's none of these feeds on crypto are regulated. So my thought on it is the way to solve that. You might have slight differences because one is Gemini Exchange, the other is Coinbase. Same thing happens on FX feeds. There's slight differences, and those differences make a difference in terms of the pattern metrics and HSI metrics. What I'm going to suggest is you pick a platform, you stick on it. With the crypto stuff that we've done a lot with lately, many of you know, regardless, there's been some variation. We've talked about that because of that data discrepancy. But all in all, we're going to get very similar readings and patterns. Here's an example. Again, here's Bitcoin. And with some of the HSI readings that we've seen recently have been really spot on the 4 hour, even better than the patterns. And I would look at that, whatever your data feed is. If you, let's say you're with Coinbase and you're trading off of Coinbase, obviously go with the Coinbase feed and don't worry too much about the discrepancies. They'll be handled within the platform itself. But this is the TradingView program, and here is Bitcoin on the hourly chart. I put this up, I think yesterday, and looking for another pause here in Bitcoin. And I would look at that not only within the pattern but the HSI based on this feed, which is Bitstamp. I think the other ones are very similar. You're not going to get, you might have some differences, but you're not going to be completely off. That's my point. And again, if you're not getting the same one, um, you know, if it's beyond a difference, let me know. But for most part, there, yeah, example is there's Coinbase versus Bitfinex, and very similar, but you don't have the same HSIs on Coinbase. Look, here's the HSI on Coinbase was not as volatile in the data feed. Just something to point out. But again, I think once you spend a little time, stay on your preferred data feed, go off of those signals generated. They should not differ on, say, futures and some of those other regulated, the regulated data markets. Let's get a couple more here. Are you planning to add a scanner to TradingView? I think so. TradingView just came out with a new upgraded version of their Pine script. I think that could happen maybe later in the year. And TradingView, the patterns have been phenomenal on crypto. I've been utilizing it mostly on crypto. This month, everybody, listen, I'm trying to put together a a great package for everybody, and we've done that where everything is one price. The course, you can either get an annual or you can get the lifetime. And the difference is you get more access to the gold membership. But go to harmonictrader.com, go to the blog, check out the course here. And I started the session looking at that just to show you, you get everything just with the one package. And I've designed that so that it's a one-stop shop. You'll get the light, which is TradingView or Thinkorswim, and you get eSignal or MetaTrader. These have scanners. The HPC light obviously because it doesn't have all the functionality. But MetaTrader 5 is excellent for cryptos as well. And everything that you want to see is on, spits it out. I think eventually we'll have something that looks like this on TradingView. We're still looking into it. They just released that beta version about 2 weeks ago. But that would be eventually what we will do. And again, we are doing upgrades included. So if you get HPC Lite in this package, we include the upgrades there once we do them. But I don't think it's not going to be for a few more months until that's ready. And there's Pound Aussie. That's just one I'm pulling up here, right back down on Deep Crab. 177, 176 area. But look at this on Harmonic Trader and check it out. And that way then you can also get to the course. And I'm doing the course. It's probably going to be the only one I do this year. And again, as I said, I haven't done one in 2 or 3 years. And everyone else who is here that's either new or you simply don't want to pay, that's fine. Just go get a basic membership. So go to harmonictrader.com and sign up as a basic member and get everything that you need. And that is my, really for everyone to kind of get you started. I recommend that everyone takes the free trial, download all the books for free here. If you want to buy the physical books, you can, and watch the webinars. Within 2 weeks, and so let's look at the calendar. So our course starts a week from Friday on the 8th. And that would get everyone set up, ready to go to take the course, and you will understand the advanced terminology of terminal bar and stuff like that. Yeah, you have an HP. The scanner is on Ninja, Sierra, MetaTrader, and eSignal. Does the Thinkorswim version come with HSI? No, it does not. But that's what you can get it on one of the other ones. Again, why we didn't do that is because the script functionality does not allow for that at the moment on Thinkorswim. Once we do, we have it. So we will upgrade it. If anybody wants to try out the software, please go to harmonictrader.com, go to the blog, and start with the course. So go to the blog here, okay, and get all the information that you need. All right, go and click the course here, and your course information will not only tell you what we're going to do on the course, but how to get started for free as a basic member right here on the sign up, and then the free software. And if you want a TradingView or Thinkorswim trial, send me a note at harmonictrader@harmonictrader.com. So absolutely really important that everyone gets with the software. Everything that I'm doing, everything that I will do in the coming year will be based on the software. And the terminology, the stuff that we're talking about in those sessions will be, away from the patterns. We're going to be talking less patterns, and again, more stuff like terminal bar, HSI checkback confirmation, all of that kind of thing, which is really the language of what we're trying to put together of instilling the proper expectations. Yeah, you guys, Jeff, and all the gold members, and anyone that has bought the program in the last 30 days, all you guys can come to the course. If you're a monthly subscriber to the gold membership, you're included. If you're just on the monthly software, if you upgrade, again, you can attend the course and get all the extras. Check that stuff out, guys. And we'll be back tomorrow. So here's what I'll do. So let's go through who's here from United States? Okay, somebody throw me out something United States. I want the first person from the United States because it's so much easier to send you guys a book. Who wants a book? Okay, I'm going to send a book. I'm going to leave it like this. It is 1:15. I'm going to get back to work with the markets. If you are from the United States and you would like a volume 3, the first 5 people to email me, harmonictrader@harmonictrader. You got to send me an email, harmonictrader@harmonictrader. You got to be in the United States. You get a book. Now, send it now. Everyone else, if you want a free trial, you got to email harmonictrader@harmonictrader, okay? And send me your address and I'll mail you a book. If you're listening to the recording, you can't. So everybody that came here, if you're in the United States, if you're outside the United States, I can't send you a book. Sorry, I tried to on the last time. Half of them didn't make it. The other half cost me $40 a book to send it, but that's fine. But the people that are international, you guys get a 30-day MT4 free license. So if you're international, you can access the software. And everyone can get a 7-day trial or a 14-day trial, whatever you want. But for everyone that's international and you came to the session and you email us, by the end of the day, with your setup, we'll give you the 30 days free trial and get with the program on the course. So that's what I have for this session. Again, I'm going to be doing more of this come the new year. But go to harmonictrader.com and start with as a basic member. Please start for free. And I know a lot of you have been from other people, but this is where it can end for all of you, where literally you can stop looking. Everything that I do, all 4 books I've given away for free. The software I give away for free because I don't want uneducated subscribers. I need educated subscribers because those that get it and understand the framework, okay, usually they're no problem. The big problem has been the gimmicks that have been put out there by so many other people that don't even understand the framework, that I will show everyone how to do this stuff real time. If you followed my crypto stuff, we're exploding on that. If you follow the gold membership stuff, we do that all the time. Do I have to trade Forex to use MT4? No. Scott, is it true that, oh, I won't even answer that question. I won't even answer that question. Hey, Omar, to answer your question, send me an email, please, and I will gladly answer that. The answer to your question is no, but I'm not even gonna give that guy the decency of even saying his name. I'll tell you I'll save a whole another session for turkeys like that. Would NinjaTrader 8 scanner work for scanning stocks and futures? Absolutely. Yep. Yeah, Omar, send me a note. I'll send you the whole history on that bankrupt guy. You want to talk about bankruptcy? You talk about that guy. I won't even say his name. Yeah. Listen, guys, there's so much shenanigans going on in harmonic patterns, and it's a damn shame. But that's all right. I have figured out the way to truly, essentially, stand by the work, which is to give it away for free. Give away the book so people can learn without having to pay for anything. Give you a free software trial. And if you want access to the TradingView platform, again, get with the TradingView platform. All these other people that are, out there doing harmonic patterns, okay, they're either, trying to just show you the patterns from the past that worked out. I'm trying to show you the right side of the chart, how to read that to determine when you've got a reaction versus reversal. That for me is we've done it with the software. I'm super confident in the patterns that get generated when you've got here. Where is it? When you've got stuff like what we've been putting, even stuff on, say, the Twitter feed, and a lot of you guys know that I don't just throw up things just to throw stuff up. And here we go. Just go look at some of our last ones. Here's the one. Here's Ethereum, folks. And I was talking about this since 570, 590. That hit 740. And Ethereum 1200, Bitcoin 35,000. If you've seen any of my videos, you guys know what my take is on this. But as bullish as I am, I'm still waiting for patterns, type 1, type 2 patterns, just like all of this. So again, It just is a shame that it has to be like this, but I don't worry about it anymore because I know you got the serious traders that are here get it. I don't have to convince anybody of anything. And anybody that wants to know that's new that really doesn't fully understand, well, now they have the ability to check it all out for free. So please do that by all means. All right, here's a 1 minute crab now up in that NQ. That's a much better. We had that 5 minute. There you go. There's that 5 minute ABCD. Bring that back here. There it is. And now you got, there it is. Remember what I said, folks, about being to the right of the uptrend line? That's a much better position for this HSI checkback. And that is going to be really a lot of the stuff that we do. In our course next week, that's exactly what we're going to do. I'm going to show you guys how to get to this point. We want to be executing to the right of that line, not to the left. And now that looks like in a much better position for your move, at least back to target 1 down at 03. We'll be back tomorrow. Listen, I could go on forever, but I'm not. Do check out the materials, the resources. I'm leaving you guys with a nice little trade here around 35 for a check back down to 03. See how that plays out. And then tomorrow, our gold members will be back at 9 a.m. So go to Harmonic Trader, get set up there for free, please. And then if you have any questions or you want the free trials, send me a note, Harmonic Trader at harmonictrader.com. The software does not repaint. Patterns will fail, but that's only if you don't have confirmation in most cases. Listen, come back tomorrow. Check out the post of this on the blog, and we'll be back tomorrow 9 a.m. If you guys want to come there, I will make that link available on the blog. So check back the blog tonight. Again, hell of a year, everybody, and I think everyone knows where I'm going with this. I'm excited with some new announcements coming very soon. I'm really excited for what these markets are, really what we have to look forward to. And if you have any questions, again, get to Harmonic Trader. Anything else, we'll be back tomorrow. And if I don't talk to anyone else till next year, have a great new year, and we'll see you really soon. Thanks, everybody.